Hello friends, how are you? I hope you all are doing great. So, let's continue with the cost sheet, and most probably in this lecture we are going to wind up with this chapter. And what we are done with is we have been doing the practical problems. In the last lecture also we did two practical problems, question number 1 and 2, and I told you that in this lecture we will be doing another practical problems, question number 3 and question number 4. Question number 3 is quite comprehensive question, right, covering almost all the areas, right? And see, there is one more practical problem which is very comprehensive, given by ICAI in their module. That was a newly added one in the May 2021 attempt. It is a very good comprehensive problem. I have discussed that problem in my ICI SM series also, and the same has been discussed in the RTP series on YouTube for May 2021, right? That similar question was there in the May 2021 RTP series. So I've covered that on the YouTube also. That question is very good and you must do it. Right, sir. So now out of question number 3 and question number 4, we'll first do question number 4, and I request all of you that if you have not subscribed to the channel, first go and subscribe to the channel and press the bell icon. Without that, do not continue with the videos, right? It's an order. Okay, sir. Now, let's start with question number 4. A very simple question. Only one point is to be discussed in this question, nothing else. A very simple question. ABC Industries manufactures a product X. In the beginning, there were 5,000 units of the finished product in stock, valued at rupees 15 per unit. Now, this is what? This is opening stock of FG. Right? Any doubts in this? Because it is given in the beginning, there were 5,000 units of finished product in stock, valued at rupees 15 per unit. Very good, sir. Other stocks as on date was WIP rupees 57,400 and raw material 1,16,200. The following information is gathered. So that means this is opening of WIP, right? And this is opening of raw material. Any doubts in this? Right? The further information is given. The materials 9,06,000, right? So this must be the purchases, because opening stock is given. So this is purchase of material 9,06,000. It is not 9 point. It is 9,06,000. Freight inwards 55,700. Other factory overheads 3,17,300. Closing stock of WIP is 2,000. Labor is given. Indirect labor is given. See, this is direct labor. Indirect labor will go where? It will go in the factory overheads. Closing stock of raw material is given, and the sales is given 1,50,000 units. There were 15,000 units of finished goods on hand at the end. That means this is what? This is your closing stock of FG. Right? You are required to prepare a statement showing the profit and sales for the year. Sales is given, sir, 30 lakh. What to should do in the sales? Nothing, right? So what you have to show is the total cost and the profit. Now, one thing, if you have gone through this question carefully, you must have analyzed one thing. What, sir? Try to analyze. Just go through this question once and try to analyze that. Is there something, some information is missing in the question or something? Try to analyze. Just have a rough idea and try to analyze it. Sir, material is given, labor is given, prime cost can be calculated, no issues. Factory overheads, indirect labor is given, factory cost can be calculated, no issues. Now, when I am talking about the opening and closing stock, I say opening stock and closing stock. In the beginning of question, opening stock is given for FG, right? That 5,000 units at the rate of 15 per unit. So the value is given for that. Value is given for that. Right, sir. Opening stock is given for WIP and for raw material also. Right, sir. Is the value given? Yes, sir. Value is given at the beginning. 57,400 and 1,16,200. Any doubts up till this point? Clear. Now, the closing stock. What about the closing stock? FG, WIP and raw material. Sir, closing stock of WIP is given to you 2000. Value is given. Raw material closing stock is given 96,400. Value is given. Now what about FG? Where is, can you identify the value of finished good? Value of the closing stock of finished good. Can you provide me from the question? Read the question carefully. Okay, I'll show you the complete question now. Just read the question carefully and tell me if you are able to find out somewhere in the question the closing stock of FG. Yes, 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 sir. Where? Sir, 15,000 units. Now, what I am asking is, I am asking about the value of finished good, not the units of finished good. Tell me where is the value? Sir, it is not there. Sir, it is not there. Then, what to do? Now, this is the only point in this calculation. In this cost sheet, this is the only point that I wanted to discuss, that how to calculate the closing stock of FG. See, the questions that we have done in the last lecture there, first question, it was not there. In the second question, the opening and closing balances were given. See, I'll show you. In this second question, the opening and closing balances were given for both, for all the three items, for RM, WIP and finished goods. Now, this is a question where the closing value of finished goods is not known. Right? Have you understood the problem here? What is the basic crux of the question? Now, let's see the solution. So, the first thing is direct material, opening stock of raw material. This is given to you. Plus purchases is given to you. Plus freight inward. Be careful. Freight inward will always form the part of raw material. This is what I have already told you, isn't it? Less closing stock of raw material. This figure 9,81,000. This is your raw material consumed. Any doubts in this thing? This 9,81,500 is the raw material consumed. Direct labor is given to you, no issues. Direct expenses are not there, so we have taken 0. So prime cost is 13,07,900. Any issues up till this point? I don't think there will be an issue up till this point if you are clear with the calculation of raw material consumed. It is easy. Opening stock plus purchases minus closing stock and freight inwards will form the part of purchases, right? Now in some of the books, if you are following some other books, in some of the books you will find that they are taking this freight inwards as a direct expense. That is absolutely correct. Don't worry. Right, that is absolutely a direct expense, but the logical treatment is added to the cost of raw material, right? That is the best treatment. That is what I always suggest. Why I am telling you is because in some of the books the treatment might be they have taken it as a direct expense. Even that is correct, so don't worry about it. Okay, don't raise the queries. Don't raise such queries ki sir they have given it as direct expense, you told it as a raw material, as a cost of raw material. So both the treatments are absolutely correct, right? There will be no change in the answer. So prime cost 13,07,900. Factory overheads will contain two things, indirect labor and other factory overheads. Both are given to you, so nothing to worry about it, right? So nothing to worry about it. 4,38,900 gross factory cost. Add opening WIP less closing WIP. So you get the net works cost or the factory cost, one and the same thing. 18,02,200. No issues up till this point. Clear? Now, for the cost of production, do you have anything? Primary packing, research development, quality control, administration related to production, less credit for recovery, scrap. Nothing, sir. Absolutely nothing is there, right? What I have done is I have prepared the whole format basically, right? Now, cost of production is 18,02,200. Now, my point is here, I have written 1,60,000 units. Sir, how is this 1,60,000 units? What I am saying is, listen to it very carefully now. Listen to it very carefully. See, I'll be removing this. This was just for explaining you people that what this question requires. Now, listen to it very carefully, right? I'm talking about the FG. My opening stock is 5,000 units, right? My sales is 1,50,000 units. Any doubts? So read the question carefully. 1,50,000 units, right? What is my closing stock? My closing stock is how much? 15,000 units. Now, can you tell me the number of units produced? How you will calculate the production? See, in case of any confusion, just do the very simple trick. What is that trick? Listen to it very carefully. You have learned about the trading account? Yes, sir. In the small classes, you have learned about the trading account. How you prepare the trading account, sir? Sir, we studied in +1, +2. You are a chartered accountant. You will be studying accounts also. So the trading account should be on tips. How you do it? You say, one second, what is this? What do you say? You say opening stock, right? Opening stock you take, plus you take purchases, right? And here you take sales, and here you take closing stock. This is your trading account. For a manufacturing concern, if you have to prepare such an account, what you will do? Opening stock will be there instead of purchases. For the finished goods I am talking. For the purchases, this is for the trader. For the manufacturer, here you will say the production. Any doubts? Purchases is for the trader who is purchasing the goods and selling the goods. For a manufacturer, opening stock will be there instead of purchases. He will be manufacturing it. He will be producing that good, right? So I will take production. Then I will take sales and the closing stock. Now, if you have to calculate this value, you have all the three values, you have to calculate this value. How you will calculate? Sales plus closing stock minus opening stock. Any doubt in this thing? Any doubt in this equation? Sales plus closing stock minus opening stock will give you production. Number of units produced. Any doubts? Right? So the same thing we are going to apply here. What is my sales? What is my sales? My sales is 1,50,000 units. What is my closing stock? Plus 15,000. And what is my opening stock? 5,000. So can you tell me the number of units produced? That is 1,60,000 units. Any doubt? This 1,60,000 units have been produced in the current year. Produced in current period. Produced in current period, right? Now, from this is where 1,60,000 came. Now this 18,02,200 is the cost of manufacturing this 1,60,000 units. You will add the opening stock. Opening stock is given as 5,000 units at the rate of rupees 15, 75,000. No issues in that. Absolutely no issues in that, right? Now, you will subtract the closing stock of finished goods. I have given as note 1. Sir, where is the note? Nowhere. So we can prepare one. Now, okay sir, we'll prepare the note now. One second. This is our working note. You have to find out the value of closing stock of finished goods, right? Sir, there was an opening stock of 5,000 units. I produced 1,60,000 units more, right? Now I have 15,000 units. How will I know whether I have those 15,000 units out of that 5,000 units or the complete from that 1,60,000 units? This is where the two methods will come. One is Fifo method and the other one is weighted average method. First, I will tell you by the Fifo method, right? Normally what we follow is Fifo method, right? So first I will be doing it by Fifo method. Fifo method says if this 15,000 units are left, that means this 15,000 is from this 1,60,000 only. Why? This 5,000 which was the opening stock has been sold, right? So the closing stock cannot be out of that 5,000 units that have been sold by the Fifo method. That is first in, first out. The opening stock was first in, it was first out. So that means this 15,000 units, this 15,000 units of closing stock is from current production. Is that clear? right? The FIFO method says the 5,000 opening units have been sold. Obviously, sir, they would have been sold. So what is left is from 1,60,000 current production. Now tell me, can you tell me one thing, that for 1,60,000 units that you have manufactured, what is your cost? 18,02,200. Any doubts in this thing? What is your cost of manufacturing 1,60,000 units, or 18,02,200? Any doubts up till this point? No? Right. If 18,02,200 is the cost of manufacturing 1,60,000 units, then what will be the cost for 15,000 units? That will be 18,02,200 divided by 1,60,000 multiplied by 15,000, right? So this cost will be 1,68,956. I have rounded it off, right? So this is 1,68,956. It will come in points. I have rounded it off. No issues. Is that clear? Is that clear? Now, come to the second method. Now, what about, sir, if the question says you have to follow the weighted average method, sir, then what will we do? Weighted average method, sir, then in that case, what is to be done? In that case, how you are going to calculate the value? Listen to it very carefully. In that case, what you will do? You will say, what is the cost of manufacturing 1,60,000 units, 18,02,200, plus what is the cost of opening stock? That is 75,000, right? Divided by 1,60,000 units plus opening stock of 5,000 units. Now this is how you will calculate the value. Now this value will come something around 1,70,000 something around, right? This is how the weighted average. If you now examination point of view, sir, what to do in the examination? Listen to it very carefully. If the method is specified, then do it accordingly. 99.9% the method will not be specified. Will not be specified, I'm saying, right? And if the method is not specified, you have to follow the FIFO method. Very straightforward, right? Do not use the weighted average method. In case the question is silent, directly use the FIFO method. Don't think about it. Don't give a second thought to it, right? Now the closing stock of FG calculated. Now cost of goods sold 1,50,000 units, 17,08,400. Add general administration selling, no, nothing given in the question. Cost of sales is given to you. This is the balancing figure. Very simple. So the only point here was the calculation of closing stock of FG, right? I hope it is clear that how to calculate this closing stock of FG by FIFO method also and by weighted average method also. I have told you both the methods, and I have told you in the examination what you have to do, right? If the question is silent, what is to be done? If the question specifies, what is to be done? Now you are ready for from every perspective, right? So this was our question number 4. Now quickly come to question number 3. Very simple question. The only thing is it is a comprehensive question. Simple question, sir. Nothing to worry about it. Let's start with question number 3. Given below are some of the details of the trial balance of ABC Limited as on 31st of March 2013. Opening inventories are given. Finished goods 80,000, raw material 1,40,000, work in progress 2 lakh, office appliances, plant and machinery, building. Sir, a small question to all of you. I have given you the format of cost sheet, right? In the format of cost sheet, have you seen anywhere taking me the assets, the value of the assets? Are we going to take the value of assets anywhere in the cost sheet, sir? Have you seen that? Just go through the format once. Just open your books, open your handbooks. Just see the format once and just tell me that whether we take the value of the fixed assets in that. No, sir. Then, sir, why are these values given? Just check your notes. Have we discussed something about the depreciation, sir? We discussed something about the depreciation, sir. Sir, something about the depreciation we discussed or not? Yes. So whenever there is an asset value given for the cost sheet purpose, the first thing is that this is given for the purpose of depreciation. Right? Now sir, what is to be taken? You said depreciation of factory to be taken in the factory overheads, administration in general administration, selling and distribution. But here, how we are going to calculate depreciation and how we are going to treat depreciation? Read the question carefully. Complete question first, right? Sales is given to you 7,68,000, sales return is 14,000, right? So you will take the net of it. The net sales is to be considered. This will be your net sales. Any doubts? Right, sir. Material purchase 3,20,000, freight incurred on the material 16,000. Now this will form the part of cost of raw material, already discussed. Purchase returns 4,800. So this will be your net purchases. This is your net purchases. Right? Productive labor. Productive labor is what, sir? Productive labor is my direct labor that is directly involved in the production. So this is my direct labor. Indirect labor, this is my factory overheads, isn't it? This is my factory overheads. Factory supervision, again part of my factory overheads. Repairs and upkeep of factory, again my factory overheads. Heat, light and power, sir, we'll read the question. Taxes 6,300, we'll see. Miscellaneous factory expenses, again factory overheads. Sales commission, sales traveling, sales promotion, distribution department expenses, all these are related to what? Selling and distribution expenses. Selling and distribution overheads. Office salaries. Office salaries is office and admin overheads. Office and admin overheads. Interest on borrowed funds. Interest on borrowed funds. What is this? This is a finance cost. Sir, where do we take the finance cost? I have already discussed in the lecture number 2. Where do we take the finance cost? Now you know. I am not going to tell you. Just check your notes. Further details are as follows. Closing inventories are given to you. Right? 1 second guys. There is some misprinting here. This is for the finished goods. Okay, I'll write it. This is for the finished good. This is for raw material and this is for WIP. Right? There is a mistake here. Right? Accrued expenses on direct labor. Again, there is a mistake here. Small mistakes. No problem. This is for the direct labor. This is for indirect labor. Interest on borrowed funds. This is for interest on borrowed funds. Now, what is this accrued expenses? The expenses which were due but not paid. Right? Expenses due in the current period. Those expenses belong to the current period but have not yet been paid. Right? Depreciation to be provided on office appliances 5%, plant and machinery 10% and building 4%. Depreciation is now given. The following additional information is relevant. Heat, light and power are distributed to factory, office and selling functions in the ratio of 8:1:1. See, I have 8:1:1. This ratio is given. Clear? That's why I left that part. The taxes, 2/3 to the factory, 1/3 to office. Right, sir? The information about taxes is also given. Depreciation on the building distributed to factory, office and selling in the ratio of 8:1:1. So whatever the depreciation you are going to calculate, that will be distributed. Depreciation on building, he is saying. Because in a building, there is a factory area also. There is a office area also. There is a selling department also. Then sir, what about the depreciation of office appliances and plant and machinery? Sir, very much clear. The office appliances will be used where? In the office area. It will be taken to office and administration expenses. The plant and machinery is being used where? Sir, in the factory area. The depreciation on plant and machinery will be taken to the factory overheads. So it is very much clear directly. Any doubts? For the building, there was no bifurcation. So the bifurcation is given in the last. He's saying, where it has gone? Here. He's saying depreciation on building is to be distributed between factory, office and selling in the ratio of 8:1:1. Any doubts? I have written everything with the expenses. I think you can attempt this question now, isn't it? This is a very simple question. Everything is given. Let's see. Don't worry. I'll show you the solution. Now some of the people might think, sir, show the solution, sir. How can we do it, sir? We are just a small kid, sir. See, the opening stock of raw material is given to you. add purchases net of purchase return. So be careful, right? I have told you in the question also, 3,20,000 minus 4,800 net purchases you have to take, right? Then freight incurred less closing stock. Any doubts? This is your direct raw material consumed. This is your direct raw material consumed. Direct labor, including the accrued part. Now this, be very careful that accrued part is to be added, right? Just listen to it very carefully. Any expenses or any cost belonging to the period for which the cost sheet is being prepared, whether that cost has been paid or not, right? That cost has to be included in the cost sheet. What I'm saying is, any cost, I'll repeat it again. If you people want to write it down, you can write it down. Any cost belonging to the period for which the cost sheet is being prepared, whether that cost has been paid or not, will be included in the cost sheet, right? Note down the second point. One more point here. Any cost not belonging to the period for which the cost sheet is being prepared, right? Prepaid expenses. Any cost which does not belong to the period for which the cost sheet is being prepared, but that cost has been paid in advance, that cost is to be subtracted from the cost sheet, right? Now these are the 2 points. Write down these 2 points, right? That you must remember, because you can get the practical problems on these 2 things, right? Direct expenses, nothing, prime cost calculated. Factory overheads, depreciation on plant and machinery, 10%, directly no issues. Depreciation on building, 4% into 8 by 10, because the ratio is 8:1:1, right? 6,400. Indirect labor, including the accrued part. Always remember now, right? Factory supervision is there, repairs and upkeep is there. Heat, light and power, 8 by 10. Right, bifurcation should be very careful. Taxes 2 by 3. Clear, 2/3 is to be devoted to the factory. Miscellaneous factory expenses. So the total factory cost, you will get the gross factory cost. Adjustment for WIPs given in the question, you will get the net factory cost. Nothing in this part. So the cost of production is equal to your net factory cost. Add opening stock of finished good less closing stock. It is given in the question, so no hassles. Absolutely nothing to worry. Cost of goods sold. Add journal administration overheads, depreciation on office appliances, depreciation on building 1 by 10, heat, light and power 1 by 10, taxes 1 by 3, office salaries 8,600. So this is your, one second, this is your cost, one second. Yes, journal administration overheads. Now added selling and distribution overheads. Continuing with that, right? Selling and distribution overhead, depreciation on building 2 lakh into 4% into 1 by 10, because it is the share on that. Heat and light 1 by 10, sales commission, sales traveling, promotion, distribution. Everything is given, sir. Right? These are all the expenses related to the selling and distribution. So the cost of sale is 7,13,000. Sales net of returns is given to you 7,54,000. Be careful. These are the small mistakes that you can commit, right? Sales minus sale returns. So these are the small things that you need to focus on while attempting the question in examination, because in a hurry you might miss out on this part. You might miss out on the sales return. You will take the sales, miss out on sales return, right? The profit is your balancing figure. Any doubt? The question was easy. The only thing was the interpretation of the question, right? That what should be taken where. This is a comprehensive question. This is a good question. And the one thing that I have told you about the 2 points, accrued and the prepaid part. Clear? I hope everyone must have written those points, right? So with this, we have covered question number 3 also. There was nothing else to be discussed. There were only the small points that were to be discussed, nothing else, right? And with this, we complete the chapter of cost sheet. Nothing else to be done in the cost sheet. Now what is to be done is on your part to practice the questions. Practice questions from ICI study mat, right? For that I have a course. I have already told you ICI SM series is there on the app, plus from the handbooks that you have, right? These 2 things if you can do, you are good to go with the cost sheet, right? Plus these 4 questions attempt on your own again, right? After listening to the video, attempt on your own again. So that will give you a good amount of practice. So we are done with the cost sheet now, right? And now in the next lecture we are going to start with a new chapter. That is, which chapter, sir? Cost accounting systems. Cost accounting systems. Now a very interesting chapter, again, good chapter, interesting chapter, cost accounting system. This is what we are going to start in the next lecture, right? So see you guys in the next lecture. Till then, stay safe, stay healthy. Thank you so much.